Welcome back to Startup Street. Fintech giant Razorpay, which is in the process of moving its parent entity from US to India, says its IPO is at least a couple of years away. In a chat with my colleague Ritu Singh on the sidelines of the Global Fintech Fest last week, Razorpay's co-founder and CEO Harshil Mathur said the company would go public only after it breaks even across all its businesses. Mathur also spoke about how business has evolved since the regulator brought about a slew of changes in digital lending guidelines last year. Take a look.
So I wanted to start by asking you, because the regulators and policymakers have also been here, what have been the key issues you've brought up with them? What have been the key concerns?
A lot of discussion right now has been around innovation, right? Like what more can we do? And like the regulators are constantly launching, like for example, they've announced credit lines on UPI. So what does that mean? How can we play a role? How can banks play a role? How can we work together to create that? So some conversations around that, around the innovation aspect. The second has been around regulation itself, yes. Right? Like what are some of the areas of regulation that are expected to relax or change over time, and trying to get sense of it. Of course, submitting our views on that. I think, and the last piece has been around, I think, the general concept of, and this is more from all of us together, right? The concept of cybercrime and financial literacy. In
the last 1 year, we've seen a spate of guidelines. Of course, the big digital lending guidelines that define the role of LSPs, etc. The FLDG, the First Loss Default Guarantee Partnerships, capped at 5%. How have these affected your life? Have you had to sort of make significant changes? Have you brought up any of these with the regulator?
That's everyone's concern, including the regulators, and we understand their perspective. I think the ask has been, there is only one ask essentially, is as long as we can do it in a very consultative fashion, and we've done in a lot of regulations where there's a draft published first, there's comments expected, there's roundtables that happen around it, and then changes happen. When that happens, it's actually very easy for the industry to adopt, because we know what's coming. We know what is a concern, we know why is there a concern, and we can build around it. We can even submit recommendations that, okay, if this is a concern, maybe you can solve it this way. So I think as long as that happens, it's easy. I think on regulations you mentioned, for example, FLDG. I mean, earlier there was discussion. Everyone felt that there's going to be no FLDG, and everyone was very worried about it.
So this 5% cap is not really.
It's a very positive. It's a very positive step that it basically shows.
It's not a gray area anymore.
Yeah, it basically shows that the regulator is okay with FLDG as long as it happens to a point. It's not a complete transfer of ownership from a regulated entity to non-regulated entity, but it's partly sharing of risk, which is what the purpose of FLDG should be, right? And I think that's what regulators defined. We hope that it over time expands as well a little from 5%, but we are also very certain that it should never be 90%.
Give us a business update of where things are at, what FY23 was like for you.
Yeah, we have seen massive growth in the last year. Our core business, which is a payment business, grew by a factor of almost 60% plus. Just on the core payments, which is the online payment side.
And the latest as of FY24?
FY24 is still underway. We hope it goes higher than 50%, 60% at least.
YOY growth.
YOY growth.
Okay. What about the neobanking and lending part?
Yeah, so that's the core payments, online payments part. Then we have 3-4 more lines. So one is the neobanking space. We're seeing really good traction around the financial management pieces that we're building. So we launched payroll, where we help businesses manage salary through our platform. We also have now a significant presence in the offline payments platform. We have about 650,000 terminals deployed in the offline world through Razorpay now, which is now EasyTap, which was now completely rebranded to Razorpay. And then we have recently launched in Malaysia. We are one of the first players to launch in Malaysia. We have a decent presence there now. What
is the trajectory? What is the road to profitability for the entire company as a whole before you can hit that milestone of going public?
Yeah, see, from the payment side, I mean, we have given it almost 8 years, and now it's breaking even, making decent amount of. I mean, the unit economics was always positive, but now it's breaking even beyond the operational costs, beyond the fixed costs at least. IPO timeline is at least 2 to 3 years, so we want to take about a year from there to go public.
But what are the aspirations for the lending part of the business?
I do believe, and this is different from most of our peers, we believe payments itself can make a decent amount of money. We want to do lending, not from the context of that, hey, it makes a lot of money. We actually believe our payments will still make more money than lending.
But it's a large market.
But so that's the need. There's definitely a lot of need for lending. And I'm talking about B2B lending. That's what we focus on. So when I talk to this average business owner, the biggest hurdle to their growth.
So merchant lending could get how big for Razorpay?
Yeah, so on an overall basis, it could contribute about 30%, 35% of our revenue.
By?
Next 2 years.
You're also in the process of shifting the domicile. We wanted an update on that because it's a costly affair. Your peer PhonePe, for instance, has had to spend more than 8,000 crores doing that. What about you?
Yeah, so it's going to be expensive, but see, that part is something we are we have convinced our investors and shareholders that, hey, this is something it makes sense for us. We're still figuring out a lot of intricacies around it. It's not just the cost part of it. There are a lot of small laws and regulations that kick in when you want to do that.
And how long before we see that happen? Because that is a precursor to your going public.
So the timeline is not really in our control. There's a regulatory approvals and stuff like that. So I can't give an absolute date on it, but it should take at least a year, if not more.
All right, Harshal, thank you for sharing all of these updates with us. Pleasure speaking to you.
Thank you so much.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates continue on the other side. Stay tuned to CNBC TV 18.